Hi, I'm Radical Liberation, self-declared king of the moon, and Mad Mercenary is my rather young co-host.
How are you?
Hi. We are going to rock it. It's going to be an Econ mini maximum or something. Anyway, we got some minis that are pretty much sort of the normal thing we do, and then I have an article that's a little bit meaty, but I think it's so interesting, and I'm prepped, and I want to do it. The pandemic thing that I hinted at in the title. So anyway, let's cover some things real quick. First of all, want to do a big shill here for Academic Agent, because he has done something that I don't know if I had much to do with it, but I know I encouraged him that homeschoolers are interested in classical methods of learning, which includes the Trivium. And what is the Trivium? It's logic, grammar, and rhetoric. Academic Agent now has done a course on each of those and even sells them in a package, which you can get a deal on. So you get a double deal. Anyway, first thing to understand is that he has completed the Trivium in the last week and published Foundations of Rhetoric. He says humans are not purely rational. Logical argumentation is seldom enough to change the minds of others. This course covers the art of persuasion, the full range of classical rhetorical devices, and how to exploit heuristics. I don't even know what that part means. If we go from here, though, so this is the new course, but I'm excited about the package. That's really what I want to tell you about, the Trivium here. And you'll see that each course is 150 pounds. You put it together and that'd be 450, but here he's selling at 375. And the discount code that is in the show description, I think it's homeschool20, but check the show description to get it just right. We'll take, I believe, 20% off that and bring it even lower. So if you do the package and do that, you're down to, like, I don't know, close to 300 pounds, something like that, for the 3 courses. Great deal. And this is really, you know, the classical, our forebears who built this marvelous civilization we're in the process of destroying. They saw logic, grammar, and rhetoric as the basics. You learn those before you get into, you know, science or math or something like that. Grammar, logic, and rhetoric are the tools of learning, as Dorothy Sayre put it, that allow you to then go on and learn other things. And in fact, we can see this with Academic Agent himself. His moniker is well earned. He takes on economics and becomes a master of Austrian economics, and so on and so forth. And now rhetoric. He takes on these things. He brings to bear his skills at learning, his skills of logic, his ability with writing and reading well, which is a skill, actually. And he's able to learn whatever he needs to learn and really become a master of it. But this is the beginning of that road, in my view, and in the view of the ancients and even the medievals. This was really, the Trivium was considered the foundation of learning, the foundational tools of learning, until quite recently, when we started getting in all kinds of crazy educational fads and stuff, and became, you know, idiocracy. So don't be idiocracy. Buy the Trivium from Academic Agent. That's my shill. Okay, next, our own stuff. We have Subscribestar. We're up to 10 subscribers there. That doesn't sound like much. It's great. That's regular monthly.
It's fantastic. It's the best. It's wonderful. You guys are amazing. I love you. Yeah. It's amazing. Fantastic.
Absolutely. It's thrilling to have 10 subscribers on Subscribestar. And we're going to start pushing this thing, because I'd like to see us get another subscriber to every show. And that would add up really fast if a couple people would join each time. There's a reason we're doing this. We would like to take the show up to the next level, turn it up to 11. We have one of the a Danish entrepreneur, shall we say, who is guiding us, and we are going to need to put a little money out in the short term, but we think it's going to pay off in spades in the future. But we do have some expenses in the short term, so support is really appreciated. And if you like what we do, I think you're going to see that you're going to like what we're doing even more as we improve. In fact, we've already made an improvement. I don't know how much you guys have caught it, but Mad Merc, you are actually using a different mic than you did for the first year and a half of the show, right?
Indeed. So for the first year, I was using a crappy headset I bought from a shop for, I think it was $50, and that was my mic for everything. And now, with the help of many people and the guidance of a very wise man, I am now on to something much better.
Yep.
Just in audio quality for people who just listen to the show and don't watch it. This helps tremendously, and we hope to improve the show in both audio, visual, content-wise, in this sort of fashion.
Yep.
And we really, really do appreciate the super chats that come in. But for long-term stuff, Subscribestar is the way to go, because it's a consistent income that we get, and it's consistent, so we can plan out and budget how much we can buy and how much money of our own money we actually spend. And StreamYards just helps tremendously with that. So thank you very much.
Yes, absolutely.
We really want to grow. We really want to improve the quality, and we want to take this up to the next level and be really professional about this. And we're only a once a week stream, but we want to do this the best we can and bring you guys the best value and the best content that we can.
Yeah. And exciting stuff coming. We've been having business meetings, shall we say. And speaking of support, another way you can support the show is through Radlett merch, which has been designed by Mad Mercenary. All of these are original designs, and there is just some cool stuff. Got to find my favorite. Oh, it's not featured right now. Anyway, here's a good one. Department of Defense. Who do they defend? With that wonderful shattered effect. Anyway, my own wife has bought merch. In fact, Mrs. Radlett merch. Look at this. There you go. Mrs. Radlett merch. How do you see the just the design? There we go. The Mrs. RL, Mrs. Radlett merch, supporting that. We've only done 2 videos, but more coming, supporting that other show that is happening on the channel, which is my wife and I, basically my wife, sharing wisdom from homeschooling 8 children and home birthing. That's coming soon. Anyway, good stuff. So another great way to support us, and people have really been buying the merch. They like it. They like Mad Merc's designs. Okay, that's all the shilling.
More coming soon, by the way, with with this upgrade that we're doing, with this new way forward. We're gonna get some new merch and a new design up there. So be watching for that.
All right. Someone says it looks like Subscribestar won't let me change the level of support, the tier for you, for some reason. It might be that I've only defined one tier. I'm a little bit of a new guy on Subscribestar, so remind me to look into that. Okay, let's move on. We have some minis, and then we have something that's not so many. But Mad Merc, start us off with 2 Janet Yellen stories, because she just couldn't stop at saying one crazy thing, right? But what's crazy thing number 1?
Crazy thing number 1 is, the title is a little bit self-explanatory here, but we will go into the article. This comes from Business Insider Australia. Germany backed Janet Yellen's call for a minimum global corporate tax rate, and says 140 countries could agree a deal by summer. So, what does this mean? Well, essentially, we covered this a couple weeks ago. Janet Yellen, what's happening there, Radlett? You have the YouTube thing brought up. Other one. There we go.
Forgetting that I'm live on air. Okay, go ahead.
Yes. Okay. So the title's a little bit self-explanatory there, but we will go into the article. Essentially, Germany has backed, given full support to Janet Yellen's plan. We covered a little while ago. Janet Yellen had the idea of having a standardized global tax rate. Now, what this means in practical terms, anywhere that essentially has a competitive low tax rate, so your Hong Kongs, your Singapores, any free cities or city-states that would be set up in the future, this would be null and void, essentially, because then everyone would basically, by this global decree, have to operate under the same tax rate, and this would reduce the advantage or the special nature of a lot of these areas that corporations like to operate in. and making it less attractive for businesses to move away from the United States or from Europe. So it's essentially using the power of the United States and obviously by now Germany and by extension possibly the United European Union to force companies to pay this global tax rate and force them to essentially give up any advantage they have by moving to a different area. So we'll read into this article a bit. Germany's financial minister Olaf. I'm not good at German. I pronounce.
I would just say Schultz.
Yeah, Schultz. Olaf Schultz told Reuters on Tuesday that he was in, quote, high spirits, unquote, about the potential deal which could, quote, put an end to worldwide race to the bottom and taxation, unquote. So this is the idea, again, that many central bankers and many larger corporations have, that, and statesmen, by the way, have that we're racing to the bottom with taxation, and that this is a bad thing, because remember in modern monetary theory,
it's tax competition,
right? It's tax competition. And remember in modern monetary theory and neo-Keynesian thought, the taxes, the government prints money, and that's injected into the economy, and if the economy just gets overhyped or whatever, you tax money you tax money, and that's taken out of the economy, and essentially that money is meant to be destroyed so that it's no longer in circulation and the inflation's not too high and whatnot. Now, you can already probably tell the problem with such plans, but we won't. This is not a debate into modern monetary theory.
I want to respond directly to what he said here, because this reminds me of Ralph Raico, late friend Ralph Raico, who talked about the European economic miracle. Why did it happen in Europe? And his argument was essentially the inverse of what's being said here, that the decentralized Europe, which was much more decentralized than we're used to thinking, because Germany is very new as a political unit. Italy is very new historically, and so forth. There were a lot of little bishoprics and duchies and all this kind of stuff. And so that meant that if the taxes got too high in one of these relatively small places, you could almost go down the road to get a better deal. Well, they don't want you to be able to go down the road. They don't want you to be able to stay on the planet without and be able to avoid their tax levels, right? That's the goal here, which means it's not just taxes. Ralph argued that it was really, this is where our ideas of liberty came from, really. It organically came from that tax competition. And then that caused people, different principalities, to compete in granting privileges. You can have your market here, and there'll be a market day where we won't hit you with a bunch of taxes. And so the market would flourish, so on and so forth. Out of that tax competition came pretty much all the wonderful things we like about European civilization. They want to put an end to that. That's what this means, right?
Correct. And they say this, it's this exact same as when a larger corporation lobbies the government to implement a tax rate or increase regulation, because it reduces competition, because they're already set up and they can adapt they have the funds and ability and know how to adapt to these regulations and taxes, whereas newer competitors do not, smaller competitors do not. And this is the exact thing. So in fact, Yellen stated this. So going a bit further into the article, Yellen on Monday argued for a global minimum corporate tax rate. This would prevent multinational companies from taking advantage of lower taxes overseas, she said. Again, this is staying it very much on the nose, but the idea is that this reduces competition. This stops industry moving away from areas that are highly taxed or overregulated and that are no longer competitive. So areas like the European Union, for example. And it stops companies from moving to areas that are cheaper to operate or more competitive, better standards, better corporate standards, better infrastructure, all these sorts of things that go into choosing a location to start or move a business. So again, this is essentially the bigger players trying to keep their hegemony. And I think we'll also see that in the next article, but about Yellen. But
one more
we'll
comment
hold
on
off
this
that.
article, which is just to bring up Brexit, Madmer. And in my view, if they achieve this, G20 includes the UK, I'm betting. If they achieve this, then one of the effects of Brexit that I was excited about, that is increased tax competition and competition for, you're sick of the EU's crazy regulations. Well, maybe we can give you a better deal here over in the UK, right? I was hoping we'd see some of that good competition, not just on taxes, but on regulations and other business unfriendly things. Well, that this would put an end to that. I mean, it would nullify one of the aspects of Brexit that I thought was very positive. So that's a bummer. So,
Right,
next article.
Well, I was just about to say on the Brexit front.
Yeah.
It's hard to think of this like a cartel. Now I don't mean cartel. I could or don't mean cartel, and depending on how you take this, as in an actual criminal cartel, depending on your political viewpoint of what politicians are.
Right.
But it's hard to keep any sort of cartel in line. There are always going to be people who are going to try and cheat the cartel to try and make a profit.
Right.
And in this, we could see a ray of hope, in the sense that people could sign on to the agreement, but not formally introduce it into their nation, because they always see the advantage of cheating the cartel to earn that extra business, in this case, or those companies moving to their nations, because they need the jobs, they need the politicians need to be revoted, they need another term. But ultimately, that's helping competition, not hindering it. So it's hard to keep a cartel like this in order, but if anyone can do it, it's the might of the US and their extensive reach, backed by the European Union.
Just remembering to start sharing stories as we go. Okay, the next one. This time I'll share it right away. Tell us about this one.
Ah, yes. Big economy spending. So this one comes from Reuters. Yellen tells world's biggest economy, spend big, danger lurks. Okay, so what does this mean? Well, essentially, and this article is a little bit extensive, so I encourage everyone to go and read this on their own time. But essentially, Janet Yellen continues to push this neo-Keynesian idea of increased huge stimulus spending. She praises the $1.9 trillion infrastructure COVID support package that the Biden administration is passing. Again, we've been through the pitfalls of government spending as a recovery method numerous amounts of times on the show, so I encourage everyone to go have a look at our previous catalog. However, what's interesting about this is that in the article, she continues to talk about how the World Bank and the IMF need to help developing nations to increase their debt so that they may get out of the recession quicker. Now, this makes me very suspicious, because it's the same developing nations that would be offering competition to other pre-established markets. So obviously we know Southeast Asia is an emerging market for the world in manufacturing, and we know that certain parts of Africa, such as I believe it's Botswana, but I'm not too sure, are offering significant competition. Certain areas in Latin America are offering certain competition. Mexico is starting to come around as a huge low-end mass manufacturer. So she's encouraging the IMF and the World Bank to help these nations increase their spending and thus also increase their debt, to help, quote, get out of these recessions quicker. But these will just have these nations be indebted further and have their nations fall behind further. So the cynical part of my mind has to think that this can't be purely how do I say this compassionate or the well-being of these nations in mind. I believe there's a line here. Blah blah blah. Where is it? She said the anime community will advocate. Yellen said blah. Where is it? I did have it highlighted. I am so sorry.
Well, while you're thinking about that, looking for that. How about this line? Some countries may need deeper debt treatment. She added.
Yes, treatment. That was it.
Wow,
there it is.
Treatment. What a phrase. That one in the live chat. Debt treatment. Jeez.
Yellen said developing countries should work with the IMF and World Bank on structural reforms and seeking full-fledged IMF financial programs, which carry conditions where necessary. Some countries may need deeper debt treatment, she added. She called on all creditors to, quote, fully and transparently, unquote, implement the Group of 20's new debt treatment framework and avoid, quote, unnecessary delays that can prolong debt overhangs and exacerbate growth shocks, unquote. So she, by the group of 20s, she's talking about the G20 there. So right. It's the G20's plan for new debt treatment. And she specifically
for developing countries.
For developing countries, for these developing countries to also take on more debt, which, as we've discussed, will only stifle their economies. And if you combine this with the idea of a global tax and undoubtedly more global regulation that will come with this global tax to enforce the global tax, this is essentially keeping the G20 people, the G20 nation, that are there in power. It's a cartel.
Right, and it's reminding me of Economic Hitman, I think is the name of the book, where he described going to developing countries and basically roping them into being in debt, to the developed countries. So yeah, there's some sneaky, not nice things that go on here. Okay, anything else to say on this article? We are going to I think some of the things
you cut out there for a second.
Work together, and yeah, things are going to connect up really nice here, I think. Okay, ready for more, Madmer?
The only comment I have on this is get ready, everyone, because what have you been doing to prepare? We've been talking about this, and you guys need to prepare.
Okay. All right. We're going to cover some other topics real quick, and then we'll get back to some sort of macro stuff. Okay. Well, this is from a series of articles that has been coming from my friend David Gordon, who I got to see again recently. Hadn't seen him in years. I really like this guy, and he is super sharp. They call him the Walking Library of Congress. But anyway, one of the things he does is he reviews books, and he reviews books in philosophy and economics and political theory, all kinds of stuff. So it's a series I recommend to you. I think it's on Fridays. Usually he puts something out. Anyway, this one is about the universal basic income, which I suspect we've all heard of by this point. And he's reviewing a book by Anthony Samaroff called Universal Basic Income, For and Against. And he says he wants to highlight, he says he has a good analysis of the argument that automation is liable to make so many people unemployable that a UBI will be needed to provide for them. We've actually addressed that, I think, a little bit on the show. David didn't want to get into that. He wants to talk about something else. And he says, Samaroff reminds us that UBI is a government program, and we ought to always view the state as an enemy of liberty. So what are some of the things he anticipates could happen with a basic income guarantee? He says maybe it'll start as universal, but he says that as the expensiveness becomes clear, corners might be cut, For example, it might be withdrawn from criminals or people who have antisocial behavior. I think you can see where this is going in the age of cancellation, right? You might get penalized against your universal basic income if you don't behave, you know? And then he said, not only could it be used as an instrument of social control, here, let me skip that. He's just talking about how bad the rulers are. We all know this. He says our present rulers are bad. They will remain so. They will abuse the UBI program. And so he suggests that Charles Murray, by the way, who's called himself a libertarian, but anyway, Charles Murray, who has done some good work, has been a pioneering advocate of universal basic income, unfortunately. And he acknowledges that the UBI would require people to have a universal passport and known bank account. So Samroff says, what do we think might happen? Well, you might have a mandatory government ID card in order to claim your basic income. And eventually you'll have to show that ID card to get on a plane and board a bus and so forth, right? Now, it's interesting that David did not mention, I'm reading this and I'm like, what about the vaccine passport? I mean, it sounds like this is all coming together. So he's concerned about this becoming tied in with an ID. And then he says it's the poor who are supposedly will gain the most from the UBI, who will be the most vulnerable to its abuse. And I'll just read this quote from Samroff in full. Certainly the poor who depend solely on their handouts to survive will quickly become very cautious of what they say and do. But even reasonably affluent people will think twice before risking the money. The UBI institutionalizes the state as patron and citizen as ward. Before long, we may arrive in a frightening era where payments and penalties are used to mold us into compliant little drones. The utopian dream will have descended into a tyrannical nightmare. So I thought that worth highlighting, that I've seen people talk about universal basic income sort of from a purely economic point of view. But here he brings in, you know, it isn't some Santa Claus that would be paying out the universal basic income, right? It's our state, our governments, and we know what they're like. And we know what they'll do. We've seen what they've done over the past year, right? They use something like this as a way to control, to punish enemies. You know, you're too right wing to get the universal basic income, right? That'll be how long will it take before they do that?
And we talk about, sorry to interrupt you. We talk about the stick. We have the stick and the carrot. We talk about the stick a lot, but what we could be talking about is incentivize speech in a certain way. So if you, for example, how in China with their social credit program, right? If you praise the state, if you toe the party line, you actually get benefits. In the same way, if you were to say the right things and support the state, or if you were to have a mainstream political opinion or economic opinion, you could have an additional 10% added to your UBI. So it's not just a stick. It's not just taking away UBI, but it's incentivizing different sorts of speech. Right. Now, with all this UBI, we obviously know that the effects of inflation and all this sort of stuff. So my thought pattern would be UBI. So, for example, in the Soviet Union, when people used to get their money, everyone would be waiting in line early in the morning because they knew that prices would adjust by lunchtime to the newly injected money or currency in this case. So everyone would be early in the morning with their bags trying to buy as much food as they could with their checks. So my theory here might be that with this universal basic income, people might have it so inflated that the currency might become so inflated due to this UBI that it may become worthless, and its effect as a stick or carrot becomes significantly diminished as prices adjust. Does that make sense?
Yep. Let's keep.
So there's a ray of hope there.
Yeah. Let's keep going because we have a big article at the end. I did want to keep my eye on this real estate story, and this is just a data point looking at Texas. But as some of us remember from 12, 13 years ago, the real estate prices got pretty crazy. People were doing this stuff, which I'm hearing they've been doing all along. I don't know how banks do this, but people do this stuff where they're planning to flip the property because they're seeing the real estate prices going up. So they just buy it to resell it. And so they literally will get an interest-only loan, meaning the payments they're making each month are just covering the interest. They're not eating into the principal because they're not planning on paying it off. They're planning on just floating the loan long enough until they can sell it, pay off the loan, make some money. The problem, of course, comes, as we saw 13 years ago, when real estate prices suddenly dramatically drop. But that's not what they're doing right now, despite the lockdowns and all this stuff. Here we are in Texas. I was just chatting with Don, by the way. And let's look at this table here. Austin leads the way. This is year over year, right? So this is February of last year February 2020 compared to February 2021. 12.3% medium home prices, 12.3% up on medium home prices. Other cities, Dallas, Fort Worth, San Antonio, all in the 8 to 9% range. Houston at 6%. Overall in the U.S., over 10% price increases on homes from February to February. That's great for homeowners, right? Well, last time it kind of ended up being a bummer, I think. So don't want to dwell on this, but just wanted to highlight, keep our eyes on this. We've already been talking about increases in prices in higher order goods. We'll be talking about that more soon, or higher order goods more shortly. But in the supply chain or in the higher order goods, however you want to think about it, we're seeing price increases there. Well, eventually that's going to get reflected down to the consumer prices, I think, or in less supply available. Okay, so.
Well, this actually, yep. Maybe my personal experience can actually come into this. You see, we have the major cities here that are really increasing in price. Now, as we know, Texas is quite a large land mass, isn't it? And a lot of the land is usable. It's quite usable. So we're seeing the prices go up significantly in the major population centers. Now, this could be for a multitude of factors. We know, for example, that for people moving around in the United States because of the taxes and the low regulation. So that could be a factor that's affecting these housing prices. We also know that many overseas investors invest in Texas property because, again, regulations and the price. So that could also be driving the prices up. My suspicion is that there might be some sort of government interference, because in Australia, for example, we have the first homeowners insurance scheme, which was basically a guarantee by the government to help out newly wedded couples and retirees and whatnot buy homes by giving them an assistance loan. But this also has driven up the base price of housing in a lot of areas, because obviously when the government's giving out free money, you don't say no. And so I wonder if there's something similar happening in Texas, if there's some sort of government regulation that is incentivizing the purchasing and reselling of the flipping, essentially, of land.
Right. Yeah, and I haven't done an analysis of what the factors are. Academic Agent's in the chat, and he points out that inflation is good for mortgage owners, right? Because your mortgage stays the same price, hopefully goes down a little bit if you're paying the principal down. And inflation means that nominal price actually is less expensive to pay off if your salary, say, keeps up with inflation. Your mortgage doesn't. It's hopefully, unless you get a floating interest rate, right? This is assuming a fixed interest rate on your mortgage. Okay, so
do not get a floated interest rate. I'm just telling you now.
Yeah, scary stuff. Okay,
that is truly terrifying when you get a floated interest rate.
Okay, charging towards the big event of the day here. One more thing, right? Oh, so getting into debt and so forth. Here's an article on Mises.org from Brendan Brown. Monetary policy in America is a mess. Things are even worse in Europe. Now, in this case, he actually spends the first part talking about the first sentence there, monetary policy in America being bad. I was more interested in the second part, actually, about Europe. Yeah, so he says the ECB balance sheet, the European Central Bank balance sheet is what we want to look at. He says by the end of 2021, this is headed to 80% of Eurozone GDP. To compare the Fed's balance sheet, so that's the United States, that's the equivalent, the United States Central Bank, they have 40%. Okay, wait, why am I getting... Oh, yeah, I'm sorry. 40% of US GDP is being held, is on the balance sheet of the Fed, 80% of European Central Bank. So I'm used to thinking of the United States as acting pretty crazy and the Fed acting pretty crazy, but wow, what's going on at the European Central Bank? Before you comment, I'd love for you to comment on that, Medmerk, but let me just put a little more out there first. Also, what's on those balance sheets is a little bit different. So listen to this. The Fed's balance sheet is made up of almost entirely of loans to the US government, so treasuries primarily, and government-sponsored mortgage debt. That's a little scary, shades of 2008. But anyway, the European Central Bank's balance sheet, on the other hand, which remember is twice as big compared to GDP, it consists largely of junk or borderline junk, including vast holdings of weak sovereign debt. In particular, Italy is number one on that list.
Yes.
Loans to a virtually bankrupt banking sector amount to a third of total European Central Bank assets. On top of that, the Italian and Spanish central banks have borrowed over 1 trillion euros of debt, with the Bundesbank, the chief creditor, on the other side. So, we've talked about China being a paper tiger because we've looked at what's really going on under the hood in China with crazy amounts of debt in their system. Well, let's talk about Europe. So I don't know if you pay attention to Europe a little better than me, Medmerk. Do you have some sense of why would the European Central Bank be doing things that look a lot less financially responsible than the Fed of all people?
My initial thought is that they've been doing it for a lot longer and a lot larger scale, and I'll justify my response here. So let's think back to the formation of the European Union and the creation of the euro as a common currency. Now, we should probably do a full episode on common currencies, but common currencies usually do not work. And the reason being is that with the financial barriers lowered, areas that are already industrialized, that already have a tech sector, for example, tech firms like to co-locate. And so essentially what it does without this sort of barrier, these industries co-locate in already the more industrialized nations. And so the weaker nations essentially just start to feed off the stronger nations economically. And the stronger nations economically are holding the bag essentially and holding everyone up because all these industries have moved into areas that are more productive, that are co-located, that have better infrastructure, blah, 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 blah. And so what we saw with the European Union is that, and this has become very evident today, is that nations like Italy, Greece, Ireland, Spain, Portugal, these nations that have high tax rates and high regulation and high deficit spending and very shocking financial situations, to put it mildly, are being supported by France, Belgium, Germany, the Netherlands, areas that are more productive. And so what we're seeing here is, and as it's highlighted by the ECB, they have had to try and support these nations that have essentially been failing for a long time. And so over time, this has built up their balance sheets to be much higher than what the Fed's balance sheet is. And with the coronavirus, they've had to put this into overdrive in order to support these nations even more, essentially, and their own economies, the Germanys,
Right.
the France, the Netherlands. And so what we've seen here is the beginnings of the end result of that, which is this debt to GDP ratio, which is absolutely unsustainable by any metric, unless you're a believer in MMT or neo-Keynesian. So yes, that's my initial assessment of the situation. Obviously, there's a lot more that could be said about this situation, how the Eurozone, again, I've been harping on about this, the Fed may be the more notable name, but there are many other people, many other central banks that are in a far worse situation locally.
Right, and so I'm not going to go through it in detail, but he walks through some of the different paths that the European Central Bank could take, and then he ends here. The dynamics of the inflation path, which is one of the ones he spells out, would depend crucially on the behavior of the euro. If the U.S. is by then reining back monetary radicalism in the context of accelerating inflation, then Europe's currency fall could indeed be breathtaking. Even if political forces in Germany that are against high inflation gather power under such circumstances, that would not slow the fall of the euro. In any breakup scenario for the European Monetary Union, including the opening of a path to a new hard euro, the European Central Bank faces liquidation first. So I guess you can't have stock in the European Central Bank. If so, I'd suggest unloading it. But anyway,
one last thing on this.
Yeah.
This is not financial advice. Do not refer to the show for financial advice. Any risk that you take is on you, and we are not responsible for any profits or loss that you have. In saying that, in crisis, there is always opportunity.
That's true.
There's always opportunity in crisis. And if you see an area that's going to go through major crisis,
there's a way.
There's a way to profit. That's all.
There's a way to take the other side, so to speak.
Right? Exactly, and you can see it first.
Bet on the downside. Yeah. Bet
on the down.
Yep. One more thing on debt. This is kind of cool. Look at this fun little thing. The usdebtclock.org, and if you go, let's see, this is the front page. But if you click on World Debt Clocks, we were just talking about the debt in the European Union. So here's some, I'm actually interested, the spinning numbers are fun, right? But it's actually those last two columns that caught my eye. The public debt to GDP ratio. Now, this is not showing European Central Bank, it's showing it country by country. But public debt to GDP ratio, and then the final column is external debt to GDP ratio. So just to give you some kind of level, I don't know why, we'll take USA first, and it's 102% public debt to GDP, 129 external debt to GDP. So give you some sense of the debt, right?
What do they mean by external debt? Sorry.
So public debt, I think, would be held domestically. That's my suspicion. That's treasuries held by American citizens, for example, in this case, U.S. citizens. And then external debt means that China's holding it, probably.
It's debt held by foreign nationals. Yes. Okay.
Right. Okay. Well, in fact, let's look at China real quick, and then let's look at the big numbers. China's not so bad. 54, half of the U.S.'s level of public debt to GDP. 13% external debt to GDP. They don't owe a lot of money to people all over the world, right? Now let's go to the UK. So they're about the same public debt to GDP ratio as the US, but their external debt is 315%. That's interesting. France, 252%. Even Germany, who I always grew up thinking of, Germany, the Bundesbank, right? They were the ones who were more conservative in how they managed their money, right? They have 170% external debt to GDP ratio, well above the US's 130%. And of course, you expect the numbers are not that great for Italy and so forth. Any fun ones like Venezuela in here? That would be fun. They don't show Venezuela.
I'd love to see Australia for just 2 seconds.
Oh, look at Ireland. Sorry, Irish friends. 785% external debt to GDP ratio over in Ireland.
Look at the
Hello,
Netherlands. Look at the Netherlands.
587% external debt to GDP. Yeah, so we got some countries that don't seem to be keeping their books right.
Switzerland.
Now Switzerland would be managing things well, right? Oh, 300%. Anyway, governments are governments. I'll tell you.
Look at Russia there. Look at Russia. That's 18.42.
18% on the domestic debt, 38% on the external debt. I hope I'm understanding that right. The public debt is the domestic debt. But anyway, lower numbers are better if you want your government to not be in a bad situation, and higher numbers are worse. Let's put it that way.
I know we want to get to. I know we really do want to get to the big chunky article here, and I know you're very excited. But just quickly on Russia, I know for a long time, ever since pretty much their collapse, Russia has been stockpiling on gold, silver, and precious stones as a larger part of their reserve for their central bank. So they've been doing something a little bit smarter for the past 20 years. They've been trying to. Now, that's not to say that Russia's this Austrian dream. They are most certainly not.
Okay, well, let's see Lumberg. Nobody will lend to Russia, he says. Maybe.
Yeah, they are a little bit sketch, but
I think Tragic Vision has it better. Proof Russia isn't part of Globo Homo, meaning the global homogenization forces. That's probably close.
Sweden, is that 221 or 321? I can't even see that.
On which one?
Sweden.
Oh, Sweden, 221. So 221% their external debt. Oh, an academic agent says the public debt is private savings. Yeah, but it would be private savings that's in held in treasuries or something, I would think. But yeah, right. Okay, so that's enough of that. I did share the link. I tried to share every link that we just talked about. So let's turn. Let me share one more link here. And here we go. This is the article I really wanted to highlight, and I put in the title of the show. And it comes from someone who I have not met yet, but I'm kind of starting to want to meet him. I've been hearing. I bought this book. I bought the first edition of this book back before I wasn't able to go to the Mises Institute anymore because we were having baby after baby. Let's see if I can show this. Oh, in fact, let me take this off the screen for just a moment. Have a bigger screen and show you this book here. This is the fourth edition. I've actually bought the book twice. I got busy and never read the first edition. Then I thought, well, I think I'm going to finally try to read it this year. Might as well get the latest edition before I do that. It's Money, Bank Credit, and Economic Cycles by Jesus Huerta de Soto. I'll just refer to him as de Soto for our time today. And I've been hearing lots of good things from all the people I trust. And but I had not really read him. And this article is the first time I've really gotten to get a taste for how he comes at things. And I like it. And I'm excited. I think there's a lot to learn here. This is deep and rich stuff. And it's interesting because, of course, he's talking about historic pandemics, but mostly focusing on 2020 and the COVID stuff. So really interesting to see Austrian theorist at the top of his form come at a current event. So let us dive in. I've done my usual thing. So that's the article on Mises.org. I've shared the link, but now I'm going to switch to my marked up PDF and we'll roll with that. In fact, I'll have to switch again at a certain point when we get to Hayakin triangles. Okay. So firstly, he quickly acknowledges the what we have spent a lot of literature, Austrians have spent a lot of literature on, which is proposing the reforms necessary to end recurring cycles. What are those reforms, he says? The business cycle, right? He says, eliminate central banks, reprivatize money. The classic period is what De Soto would say. Make private banking subject to the general principles of private property law, That is a 100% reserve requirement for demand deposits and equivalents. So DeSoto says, you want to end cycles? Hard money, no fractional reserve banking, get rid of your central banks, boom. But he says, at the topic of this article, he says, Austrians have always pointed out all those good things avert the unrecurring, the one-off economic crises, right? So you have something happen, a war, serious political, social upheaval, natural catastrophes, or pandemics. You get a large increase in uncertainty, sudden changes in the demand for money, and possibly in the social rate of time preference. In such cases, the productive structure of capital goods stages might even be permanently altered. So just like the Fed can mess up the functioning of or change it, shall we say, a natural event can also have a big impact on the structure of the economy. So in this paper, he wants to analyze, and in particular, pandemics. So I thought this was just fascinating. It's fun to see how a great Austrian economist comes at a problem and thinks through it. So here we go. So here's the plan of the paper, 3 sections. First, we're going to study the possible impact of a pandemic on the economic structure. Second, consider the functioning of the spontaneous market order driven by the dynamic efficiency of free and creative entrepreneurship. That is, how does a free market, right, a relatively free market, respond to an impact of a pandemic? Thirdly, we examine the specific case of massive intervention by governments, which I think covering on the show is what we've been getting at the free market response, right? And he wants to focus in particular on central banks and their effects. Okay, so that's the plan. Here we go. Part 1. The effect of pandemics on the real productive structure, the labor market, the process of capital goods stages, and the impact of uncertainty. So he talks about the Spanish flu. There's been a lot of talk about that, right, as a point of comparison. He says it killed an estimated 40 to 50 million people worldwide, beginning in 1918. Over 3 times the number of dead, both combatants and civilians in World War I. Imagine that. Now, here's a key point when we give an economic analysis. Now, let me just prepare you. This is going to be cold, clinical, realist analysis, right? It's not going to be very sentimental. He's just going to talk about these people died, they were productive workers. These people died, they weren't, So not a lot of room here for sentiment. Anyway, the flu pandemic attacked mainly men, and the Spanish flu pandemic attacked mainly men and women who were relatively young and strong, people of prime working age. In contrast, as I think a lot of us know, COVID-19 has produced mild symptoms in 85% of those infected and hits the remaining 15% hard. The vast majority of ones who have died or been hospitalized with severe cases have been elderly, retired people, and people with serious pre-existing conditions. Therefore, the current pandemic is not having a noticeable impact on the supply of labor and human talent in the labor market. The Spanish flu, on the other hand, it's estimated the aggregate supply of labor fell worldwide by over 2%. So that's quite a shock to the labor system. And it resulted in noticeable impacts. In particular, the relative shortage of labor pushed up real wages during the Roaring '20s. So there were a number of reasons, and we've discussed some of them, why the '20s were roaring. The behavior of the Fed was a big one. But here's one that we hadn't highlighted. There were less people. Academic Agent has talked about the Black Death.
I was just about to bring that up.
Impact on labor wages at that as a result of a lot of people dying. Now, is my audio sounding okay, Medmer?
Your audio is fine. Go right ahead, bud.
Okay. One person says I'm cutting out frequently. Hopefully it's just him. Let's see. Okay, so yeah, that's another aspect of why the '20s were roaring, is there were just less workers. So the workers that remained got higher wages, simple supply and demand, right? So over the course of history, various pandemics have actually exerted a much stronger impact on the labor market. Oh, here's the one that we just were mentioning. It is estimated that the Black Death, which ravaged Europe beginning in 1348, reduced the total population by at least 1/3. And this result led to considerable real wage growth, which took hold in subsequent decades. Okay, so that's the part one of part one is the effect of the pandemic on the labor. So there have been much more serious pandemics that people, you saw a big increase in real wages. We aren't seeing that with COVID. One reason is not as many people have died, and those who have died are people who were not big players in the labor market, elderly. They were done working, basically. So part two, productive structure. Part two of part one, productive structure and capital goods. So we should consider the impact a pandemic exerts on the social rate of time preference, and hence on the interest rate and the productive structure of capital goods stages. We'll explain capital goods stages in just a moment. So he says, what about, he likes to bring up the one Boccaccio. He says the most catastrophic scenario conceivable is the one Boccaccio describes in his introduction to the Decameron, when he writes the bubonic plague that afflicted Europe in the 14th century. So the belief becomes widespread, everyone's likely to catch a disease and die. Well, what happens? You're going to gear yourself towards present and immediate consumption. Let us eat and drink, for tomorrow we die. And what is the economic effect? Well, what sense is there in saving and launching investment projects that could mature only in the distant future if neither we nor our children will be here to enjoy the fruits of them? So en masse, what happened back then in the 14th century Florence, for example, people abandoned farms, livestock, fields, and workshops. And in general, they neglected and consumed capital goods without replacing them. So when you have peacetime, when you have an orderly economic situation, people are keeping their factories well working, right? They want it to be productive now and in the future. That's called capital maintenance, right? But in this kind of situation, you get capital consumption. The factory just is left to rot, or people aren't repairing things. The machine stops working. Oh well, we'll just use the machines that are left. We won't fix that one, right? That kind of thing. And so then he gets in the Hayakin Triangle, and because I just love to challenge myself on this show, we're going to talk about the Hayakin Triangle. Okay, but we're going to have to explain it first before this is going to make any sense. Here we go. So this is actually from the book I was waving around by De Soto. And here he's illustrating the Hayakin Triangle. It's got a little more going on than we need, but I'll just go through it really quick. The main thing we're going to be looking at is that sort of that slope there of those lines, right? I realize my pointer isn't shared. I didn't know that. Okay. When I highlight things, you see that, but you don't see
Is there a possibility you can also zoom in on the Hayakin Triangle? It's rather small.
I think that's as big as I can make it without losing something. Is that better?
Okay. That's okay.
So outline of the productive structure, he calls it. So stages of production. What does that mean? At the bottom, we spend, he calls them monetary units to be generic, but let's call it dollars. $100 is spent by a consumer on some product, right? That's the first order goods, first stage of production. Before that, though, $80 had to be spent on the things going into that, other things that had been produced that are going into that product. Also, out of that $100, $10 went to pay workers, say, okay? And then they made $10. Then in the second stage of production, they in turn had to buy some things that were produced before them, some tools, some machines, something that had been processed to a certain stage that now it's ready to be made into the final consumer good or whatever. They spend $60 on previously produced goods. They spend $12 on labor or land or resources, whatever, and they make $8. and so on and so forth, back to the highest order good, where they spend $18 on labor or whatever it is, make $2, and then sell theirs up to the next stage of production. So that's the Hayakian Triangle, right? So advanced economy, what is it going to look like? It's going to be taller. It's going to have more stages of production, right? And Crusoe on his island is going to have like one stage or two. Maybe he'll make a stick to help him fish or something. You'd call that the second stage good. First stage good is the fish, right? So you have one or two in the Crusoe economy, stages of production. In an advanced economy like our modern developed economies, it's actually many, many stages than 5 stages, right? You go back to the tools to mine the ore out of the ground before it gets refined and shaped into the metal that is used for the building, right? So you can imagine that the stages, the height of this triangle is going to be quite high in an advanced economy. Well, what happens is we have these macro effects. We have okay. You've got a link to share. I'll share that real quick. Yeah, so Block and Barnett. Oh, yeah, this is a criticism, actually. But Block and Barnett have criticisms of the Hayakian Triangle, but I'll go ahead and share that for your interest. But hopefully they'll also teach you about them before they criticize them. Anyway, okay, so what happens is when you have a shock to the economy, like the Great Depression, the market crash and the Great Depression, the shape of this triangle changes, you might say, for the economy. It's going to get shorter, for one thing. And also notice that this is in monetary units. So inflation and deflation of prices is going to change this bottom axis, right? So that's part of what he'll be focusing on. Two things is the triangle getting higher or lower on the vertical axis, which has to do with the economy basically becoming more roundabout.
Capitalistic, yes.
Say it again, more capital intensive is a way to say
Yes.
it. Yeah. Or getting shorter, which means it's getting a little bit closer to just, the man on his island not using very many tools, like in the Florence after the plague example. And then also he's going to be focusing on the horizontal axis, which will shrink and grow in part depending on inflation and deflation and things like that. So, okay, hopefully that is a whirlwind course that is good enough for us to have some sense of what we're talking about with these Hayakian
If you would like a
triangles.
deeper explanation, we can obviously highly recommend Foundations of Economics, which you can get now with our promo code.
Yes. I think he does, in
From
fact, cover Hayakian triangles. Right?
He does in one of the lectures,
Yeah.
very briefly. A very, very good course. I can highly recommend.
Yeah, and I'll just highlight Academic Agent's comment. Extremely few people understand what Radlett is explaining right now. I just hope I'm one of them. I'm trying to become one of them. Let's put it that way. I'm going to become one of them right now because we're going to get into this. Okay, so let's look at... okay, he says this phenomenon, the one with the 14th century Florence ravaged by the bubonic plague, we can illustrate it graphically in a simplified fashion right here. So on the left, we see the pre-pandemic structure. You've got a relatively high on the left, on the vertical axis, right? Because there's a number of investment stages. And then you can see where it is in terms of consumption monetary units. Then in the post-pandemic structure, with a sudden increase in time preference, people are consuming more, okay? So it's moving over on the horizontal axis to the right. And also remember the work, people abandoning their workshops and their farms and their fields and so forth. That's that vertical axis going down. So you see the triangle changing, becoming flatter and longer. This is from A to B here. That's not a way to live. It's a simplified way of showing a bad time in history, right? Like war, like a horrible pandemic, like the bubonic plague. And then we'll talk about what that latter thing means in a moment.
One might also add that this has a striking resemblance to what Keynesians would highlight as a good thing in their solo growth models, where they would like to increase consumption of monetary units at the expense of long-term investments and savings to try and get out of a recession or a slump. But as we can see here, because it affects the process of production, it's actually not a good thing.
Right. Yep. Yep. Okay. So let's walk through this chart real quick using De Soto's words. As we see in chart 1, in this case, a sudden dramatic increase in the social rate of time preference augments immediate monetary consumption. That's figure B here, at the expense of investment. The one in the middle. Look at the one in the middle. Specifically, numerous stages, and now look at C, represented by the shadowed area in figure C in the production process are abandoned. A very large portion of the population stops working, either because they die or voluntarily. The survivors earnestly devote themselves to consuming consumer goods, the prices of which in monetary units skyrocket due to the reduction in their supply and the widespread decrease in the demand for money. Transactions in the time market and loanable funds practically come to a halt, and interest rates on the few that do take place go through the roof. So this is the impact of a real pandemic. High interest rates, high consumer prices, a decrease in the demand for money. Okay, let me explain demand for money because that's going to be key here. Demand for money, why do you demand cash? By demand money, you might think, I want to be rich. No, that's not exactly what we mean. Demand for money literally means holding cash as opposed to having a yacht or something. When times are uncertain, well, when times are really a certain amount of uncertainty, you want to increase your demand for cash because you don't know like what's happening, right? But when times are really uncertain, interest rates are high, you don't know if the money is going to be worth anything tomorrow. Think of a hyperinflation scenario, right? And so there's a flight into real goods, as Mises put it, and you just want stuff. You're like, yeah, that money might not be worth much tomorrow. You got something solid, you know, some silver, some gold, some food, right? Go ahead. You were going to say something.
Oh, well, I was just about to say two things. This is actually, I can know from personal experience, kind of the attitude I have adopted with the uncertainty that's been happening around world currencies, the US dollar, the Australian currency, the euro. With that uncertainty, I think we all are actually looking towards harder goods, land, gold, silver, other various goods that will help you in the long term, even if it's just for 3 months to get you through that initial hard period. I think that we've all kind of, to a certain extent, on this sort of sphere or on this channel at the very least, have adopted this attitude. But I'd also like to add this. You can't see right now, but my hands are moving. I'm being very Italian. I would also like to say this. Uncertainty is where the entrepreneur is made. You can't have an entrepreneur without a certain level of uncertainty. Now, obviously, uncertainty in the sense that we're talking about is extreme, but with this extreme uncertainty, there is the opportunity for extreme profit on your investment. Again, uncertainty is required for the entrepreneur to exist. So if you're willing to take on the uncertainty, you're willing to take on risk, and remembering that uncertainty and risk are two different things in our mind, and you're willing to be that entrepreneur, then you could profit very substantially. But again, all risk is on you, and all uncertainty, and the uncertainty is something that you're going to have to bear.
Okay, so we've laid out here the extreme pandemic impact, right? And he says, this is not really what we're seeing with COVID-19. There is no indication that the current COVID-19 pandemic has been accompanied by a significant change in the social rate of time preference, meaning, that extreme, like abandoning your fields kind of thing. That we haven't really seen that happening. And he says, in fact, he says the expected mortality among people of working age virtually negligible, Expectations regarding the successful completion of investment processes that will mature in the distant future remain unchanged. For example, as I think we all know, investments are still being made in the design, innovation, and production of the electric cars of the future, and in many other long-term investment projects. So if we were going through a bubonic plague, people are going to be like, yeah, we're not going to work on electric cars right now, right?
I don't need that Tesla. I'm good.
Yeah, exactly. But the Tesla marched on through all this. So what are the effects then that we have seen? There's the immediate short-term effect lasting a few months, exerted on the real productive structure by the coercive confinement measures governments have imposed. We can assume that the economic standstill decreed for several months has, in relative terms, affected mainly those productive efforts furthest from final consumption. So the higher order goods, he's saying, are the ones that are more affected, because even people confined to their homes, unable to work, have had to go on demanding and consuming consumer goods and services, even if through Amazon, right, e-commerce. So the final demand for money intended for consumption has not significantly changed in his view, either because they have dipped into their financial reserves or because they've made up for their decrease in income by relying on temporary unemployment subsidies. The productive structure in monetary terms will have fluctuated over a short interval like a pendulum, as shown below. So he's saying he thinks consumption holds steady. That's that horizontal, is a horizontal axis. And then the investment stages, pop down a bit and then went back up. That's what he means by the pendulum, down and back up. So the productive structure has not been irreversibly harmed. He thinks it was in the Great Recession of 2008, but not this time. And so there's no need for a prolonged, painful process of reorganization and massive reallocation of labor and productive factors. All that is needed is for self-employed people to go back to work, pick up their tasks where they left off, use the capital equipment that was not damaged several months ago and still available right now. And in fact, that's what I'm, anecdotally, that's what I'm seeing with neighbors and people I talk to. Yes. Some factory kind of workers are like, yeah, we never really stopped working except for a week or two, others, stopped for a while, went right back to work, except for the effects of the riots, maybe. Factories were not burned. People didn't, it wasn't long enough or dramatic enough for capital goods and tools to fall apart and fall into disrepair, right? Like he says, they just basically, once they're allowed to get back to work, people just go back and get back to what they were doing. So a very short-term temporary shock, right? Okay, second, various sectors fundamentally associated with the stage of final consumption, remember that's the consumer, are still experiencing a dramatic decrease in demand after the confinement. Now here, he's not talking about necessarily like the grocery store. He's talking about tourism, transportation, hotel industry, entertainment. They all got hit pretty hard and they continue to do so, right? I'm just seeing bands, I'm into music, so I'm just seeing bands talking about touring next year, getting back to touring again next year. So, it is going to come back, but it's still pretty slow. He says the productive structure will have to adapt temporarily to the new circumstances by making the most of the active resources remaining in the sectors at least partially affected. Okay, yeah, I can't go too deep on some of this stuff. So what is the effect of this? He says that there'd be a horizontal fluctuation, first to the left, so going in, overall impact of the decrease in demand, and then back to the right as it is replaced by new demand. But maybe not exactly the same, right? Because entertainment continues to take a hit, but people find something else to demand. Okay, so the chart permits us to visualize the grave risk involved in launching policies that tend to make the productive structure more rigid by maintaining zombie companies that should be liquidated as soon as possible and making it more difficult via regulations and taxes for a rebound to occur. So he says, this bounce here, in and back out, is not too bad unless the government makes it hard to bounce back out, right? And this is what we saw, as we discussed in our great show on that, about the Great Depression, that rigidities were artificially introduced, making it hard for labor prices to adjust to reality, et cetera, et cetera. So things just got locked into a worse state of the economy and a less capital-intensive, less productive state of the economy. All these rapid adjustment and recovery processes require a highly agile and flexible labor market in which it is possible to lay off and rehire personnel very quickly and at minimal cost. I'm just thinking about France, which is the opposite of what he just described as I read this. We must remember that unlike what happened in the Great Recession of 2008, and happens in general after any financial crisis that follows a lengthy process of credit expansion, in the current pandemic, we are not starting from a widespread malinvestment of productive factors. In the building sector, for instance, as occurred in 2008, which could justify a large volume of long-term structural unemployment. Instead, it is possible now to reallocate labor and productive factors in a quick, sustainable, and permanent way. But the corresponding labor and factor markets must be as free and agile as possible. So he says, when you have the classic Austrian theory of the business cycle, right? You end up with a economy that is doing the wrong things. And so it really needs a major readjustment. And he says that's not really the case. Again, it's that image of people just going back. They get out of the lockdown, they go back to their office, they go back to their factory, they get back to what they were doing. We don't need to necessarily have a bunch of businesses liquidate to get back to a healthy economy.
Right, and there, I'd just like to add there that with that rebound, there can be, to some extent, a rubber band effect, right? Because people have had this currency that's been stored up, and they're getting these stimulus checks, and then they're finally let back out. So, for example, areas that have had heavy lockdowns, they are finally able to get back out and spend the money, and so because they want to go on a spending spree because they've been locked up so much. There's this rubber band effect where they actually spend more than what they usually would because they want to make it a special event or they want to do something fun or eventful. So you for example, I have a family member who's the owner of several car dealerships, and he said after the lockdowns ceased effectively, they saw a huge rubber band effect where they were down significantly in sales, and then at the end of the month they went significantly up in sales over what they would usually do.
Right. Yeah. So that's some of that. Yeah, that rubber band effect. That's a great way of talking about what he's trying to describe here. It backs off and then it just bounces right back if allowed to. Right. If allowed to. Yeah. So final effect in this section is on our consumer habits. And I think we've all been experiencing this. He says the pandemic may hasten consumers' discovery and definitive adoption of certain new behavioral habits. So, for instance, widespread participation in e-commerce, right? I mean, I was always but I think everyone's a big Amazon user now, right? Any holdouts are using it. Increased use of certain payment methods, mainstreaming of video conferences in the world of business and education, more use of Slack and Microsoft Teams and things like that, right? For virtual, working with each other virtually. Interesting comment he makes though here. In practice, we may be exaggerating the impact of these supposedly radical changes, especially if we compare them to the changes that have arisen since the start of the 21st century, both from an even greater globalization of trade and exchange and from the technological revolution that has accompanied it and made it possible. So he's basically saying, there were a lot of changes happening anyway, and movements in these directions. Maybe they got a little bit, he said, hasten. They hastened it. It sort of speeded it up from what it would have been naturally. But he's saying it's pretty much just moving a little faster on a trajectory we were already on. And that sounds kind of right to me. That's part of the reason I wanted to share that. At my company, in fact, we were already using Microsoft Teams. We were all set to use it. We were moving to it. And then the pandemic came and we all had to work from home. And we were like, wow, lucky that we just all got used to doing that because now we need it to work with each other. But the point is, we didn't know the pandemic was coming. We were already making that change. And in our case, there was hardly any hastening at all. We just were already there. So this sort of fits with what I've seen. Okay, third section of this first analysis of effective pandemic is uncertainty and the demand for money. So we need to consider the impact of the uncertainty the pandemic has caused. As we saw with the bubonic plague type of scenario, uncertainty extreme result in the, let's party now and screw the future, right? Because we're probably going to die. Well, we didn't quite have that level of uncertainty. Let's not be exaggerated. So he says a pandemic may be so virulent, and he brings up the difference again. It gives a very large swath of the population the certainty that their days are numbered, their life expectancy is, and therefore their life expectancy has been drastically reduced. So what's going to happen? The demand for money collapses, and money loses much of its purchasing power in a context in which no one wishes to part with goods or provide services whose production is largely nosedived, and most people wish to consume these as soon as possible. So people want real stuff. They don't want money, because money is a great hedge against uncertainty if you feel some sense that you'll be able to use the money later to buy something. But if you don't feel like the money will even be useful later, you're that uncertain, you get out to the really extreme uncertainty, well, what's the point in holding money? And therefore your demand for money collapses, as he says. You just want stuff. How about some vodka? That's what I want, not some paper money, right? Or some food, or something like that.
How very Slavic of you.
Yeah. So of more analytical interest to us now are pandemics like the current one, which are far less virulent. Okay. And so uncertainty does escalate, particularly in the early months, because we don't know, right? Think a year ago, we kind of didn't know where this was going to go, right? And very quickly we started having the riots and Black Lives Matter stuff going on. I think that probably increased the level of like, wait, where's this going here? We got the pandemic, we got riot, I'm seeing things burning. Where is this going? He says cash balances are the quintessential means of dealing with the ineradicable uncertainty of the future. So he expects that in this case, the people's demand for money would actually increase, because it's not a complete crazy, like we're going to die tomorrow, but things are a little uncertainty. I want to make sure I'm prepared for whatever's coming, right?
You have some cash on hand so that if anything happens, you can easily pay for something and get out or move or stockpile or something that can help you in the short term.
So he possible effects of this, where the demand for consumer goods goes down, right? That is, we want to have a little more money, a little bit. We're not going to go buy that new fancy. We're not going to go buy that Tesla right this moment, because we might need to buy toilet paper or something, right? So there's going to be a bit less demand for consumer goods and more demand to just hold your cash. So he thinks that the first two diagrams reflect what is likely to happen in this case. A little bit of a reduction in the stages of production, or maybe even no reduction, but just a reduction in demand for consumer goods. So one of those first two pictures, something like that. Go ahead, Edmund.
I was just about to say, it's just like a business for what we're talking about. It's just like a business having a little bit of liquidity and not having all their capital tied up in assets. You have a little bit of liquidity to grease the gears and have everything to operate smoothly. And you have that liquidity on hand so that if anything happens, you can easily pay for it in an emergency. And it's the same thing for what we're talking about here for individuals, is that they hold a little bit of liquidity so that in the event of anything happening, they can move into a situation that is better in the short term. Now, again, this changes with the change in the capitalistic structures, and it changes if the crisis is going to be long term. But in general, this is the idea that's trying to be portrayed here, or one of the ideas.
Yep. So what does all this mean? The increase in uncertainty and the accompanying increase in the demand for money is temporary and of relatively short duration, since it will tend to revert as soon as we begin to see the light at the end of the tunnel and expectations of improvement emerge. So even though things still felt pretty crazy, I thought, as you got near the end of 2020, it didn't seem like it was just going to get worse and worse and worse. We didn't see bodies in the streets. Remember, there was like some image from China of like a body in the street or something. And it's like, oh my goodness, we're going to be stepping over bodies in the streets. Well, that didn't really happen, right? I think even, hey, even by the end of 2020, or even mid to late 2020, I think that the extremely scary scenarios seemed less likely, and uncertainty was starting to calm down a bit, right? So this lower monetary demand for consumer goods, initial monetary demand, will tend to leave a significant volume of them unsold. As a result, it will be possible to cope with their production slowdown, right? So think about that. Yes, less people, because of lockdowns, like people weren't making stuff as much, right? They weren't going into work for a while, but also people were uncertain, and so they weren't buying as much, right? So that actually kind of fit together and wasn't too bad of an effect, or the two effects kind of cancel each other out in a while. Then the increase in the demand for money later serves as an important absorber with respect, at that time, the increase in the demand for money serves as an important absorber with respect to the supply shock that occurs in the production of consumer goods as a result of the obligatory confinement. Hence, in this way, the relative prices of these goods are kept from skyrocketing, which would seriously harm the broadest sectors of the population. So I have to say, like, I was very sensitive to the toilet paper issue because I'm buying for 10 people at my house. Right? And it was hard to get it for a little while. It was hard to find it. And I was sort of frustrated that prices didn't just go up so that I could spend more and get what we needed. I was willing to spend more, and they just kept the prices the same, but then the shelves were just constantly empty. Having said that, eventually it started showing up on the shelves, and the price hadn't changed that much, right? And that was true of a lot of things. So that's what he's saying there. Then finally,
what we saw on that point, what we saw is that with the larger brands, the price didn't go up. Now, this is because of pressure from legislators around the world who demanded that the prices not go up for their constituents and that they keep the prices low. And this is also a PR move by many companies to say we're not going to, quote, price gouge, unquote, many people. But on other spheres, so for example, we talked about again, the online market, the Amazons, the eBays, the I think even Etsy at one point. These places had toilet paper and hand sanitizer and masks in the early stages at extremely inflated prices. So we saw the adjustment in prices not in the major supermarkets because of external factors and business decisions, but we saw also the adjustment of prices to an extreme degree, but in the online realm. In fact, there was a story here in Australia where some enterprising young fellows saw the pandemic coming, bought a whole bunch of toilet paper and hand sanitizer, and sold it for a massive profit. And then the government got involved and pressured them to donate their profit, all of their profit, to charity.
Right. Yeah. Which, anyway.
Which, yeah, it's like
it's like 2001 with the gorillas and fire or whatever. It's like what is it? Anyway, they don't understand how the economy works. It's very frustrating. And they try to undo when the economy actually starts to do what it's supposed to do. Right. Let the high prices signal to people, hey, there's profits to be made if you provide this thing that people really need, and that draws more people to do it. But anyway, okay, so then he says monetary, fiscal, and tax interventionism by government, central banks can increase uncertainty even further and may actually prolong it beyond what is strictly necessary and the pandemic alone would have required. So he's saying we've got the pandemic uncertainty, but then you've got the government starting to do crazy stuff, like historically unprecedented money supply expansion and stuff like that. This can also increase uncertainty. Okay, so that's the end of part one. Just kind of the neutral analysis of pandemics. So now he wants to talk about, in part two, basically systematic government bureaucracy and coercion versus spontaneous social coordination. So he talks about the theorem of the impossibility of socialism. And of course, we covered this. In fact, I'd love to share it if I can. I'm going to just pull that up real quick, excuse me, because I thought that was very useful and everyone should know it. The by and large, there it is. Okay, yeah. So we have covered what he's talking about here, which is basically Mises's original paper explaining why calculation in the socialist economy is impossible. And there we go. Okay, so there's our own show on this. But it's interesting. I like how he does this, because in that show, part of what I was trying to drive home by the name of the show is that it doesn't just apply to, this theorem applies more broadly. And that's exactly what he does here. He calls it the theorem of the impossibility of socialism, but he says we could call it the theorem of the impossibility of statism, because it doesn't just apply to the extreme case where everything is socialized. It actually affects the actions of our own governments, which aren't 100% trying to do communism, right? They're trying to do a mix, sort of a mix between markets and planning and intervention, right? So he says, the theory holds that it is theoretically impossible for a central planner to give a coordinating quality to their commands, regardless of how necessary these commands seem, how noble their goal is, or the good faith and effort devoted to successfully achieving it. So he thinks that Mises's argument cuts not just against full-on socialism, but even against some of the interventions that we've seen in 2020 and still in this year. Though some governments may have managed the crisis better than others, the differences have actually been more of degree than of kind, since governments cannot dissociate themselves from the essential coercion in their very DNA. All authorities are doomed to fail when they insist on coordinating society through the use of power and coercive commands. Problems invariably arise from the exercise of coercive state power, regardless of how well the politician at the moment performs. So keep that in mind as we start thinking about the things that were attempted last year, right? Where the government really decided which things were essential and which were not, and all this crazy stuff. So, I'm going to skip this because I'm short on time. But here he kind of repeats some of the arguments for why economic calculation is impossible. Let's see. Skip that little base comment. Okay. Right. And so he actually focuses on Spain, and I wasn't going to go into the details there, but he talks about all the things that were tried in Spain and how they were just a mess. And he says the list goes on, and he talks about the PPE stuff, right? And trying to get a supply of that and how the government couldn't do it. And anyway, he says the list goes on and on of missteps of the government and during the pandemic last year, and an endless catalog that rather resembles a description of the systematic inefficiencies which existed in production and distribution in the former Soviet Union during the 20th century and led to the definitive collapse of the communist regime beginning in 1989. Scott Adams, the Dilbert cartoonist, who's become a really interesting commentator on affairs. I don't always agree with him, but I always find him interesting. He talked about how there's these like rapid tests or something, like where you can test yourself at home to see if you have COVID. And he's like, they could have been pushing for that to be distributed. Why didn't they? And instead they just, I guess, the FDA wouldn't approve it or something like that. That's the kind of thing that De Soto has in mind here. that what the market would have just naturally done, the government stands in the way of. It pushes something that at the wrong time. By the time the government manages to do it, it's kind of too late, that kind of problem. He says, it should not surprise us that at a moment of utmost urgency and gravity, they chose, as authorities always do, since that is precisely their role in the state's framework, coercion, regulation, confiscation, etc., instead of freedom of enterprise, production, and distribution, and to support instead of hinder private initiative and the free exercise of entrepreneurship. I wanted to read that whole sentence because when he says coercion, regulation, confiscation, etc., I mean, that's exactly what we saw for the last year, right? Just incredible power grabs by the government. And, you can't go to church. I mean, when have we ever been told we couldn't go to church before? I mean, that crazy stuff.
Sorry, Radlett, what are you on about? We're still in the 2 weeks, aren't we? This is how long a fortnight is, right?
We're flattening the curve.
Yeah. What are you on about? We got the vaccine. It's coming. No problem. It's been. We're only halfway there. It's only Wednesday.
No more lockdowns. No more lockdowns ever. Okay. So other collateral effects of statism predicted by the theory. So he says, in addition to the discoordination and just the way the government just can't do the things it imagines it can do, right? You also have the fact that these are politicians, right? They want power. So they not only hold on to power, and especially increase their power even more by engaging in political propaganda to manipulate and even systematically deceive the citizenry to that end. And he gives some examples. He even aims some criticism at some of the early actions by China, but also other governments. And he says, this is exactly what you would expect, right? I mean, I don't think anyone listening to this show is probably naive about thinking that, people in government are selfless and are just trying to do the best thing for all of us. I mean, I don't think anyone believes that anymore, really. But he says, that's something we're going to see, and we did see, right, is that it becomes an opportunity to try to make themselves look good, or at least not bad. There's a lot of lying and deceiving and stuff like this. And I love this section. Worthy of special mention, and by the way, I can calm down a little because my wife's going to take the kids to karate. Worthy of special mention are the whole chorus of scientists, experts, and intellectuals who are dependent on and complicit with the state. They depend on the political establishment and devote themselves to providing supposed scientific support for every decision emanating from it. In this way, they use the halo of science to disarm civil society and render it helpless. Now, that is totally what we've been saying, right? Trust the science. Trust the science.
So this goes back to the idea of incentive structures for individuals.
Right.
If you have, now let's just take an example, a very broad example, and then we can get into a specific. If you have a scientist whose funding comes directly from the state,
right,
and the state asks them to fund research into a particular aspect of humanity or natural science or what have you, the incentive structure is not to, as it would be for if a private company is researching it, is to research it, find the result, use it for whatever means it needs to be used for, and move on to the next project. The incentive structure is to produce a report that continues to have funding coming in for that particular research and your particular subset of science, because the government is viewed as an entity with a limitless ability to grant funds and research and all this research funds and all this sort of stuff. So the objective, it becomes obscured, not to actually do science, but to have science that requires more research done into it. So this is the endless studies into useless fields that we continually see are the popping up of new research that is the next big emergency that we all must devote millions and millions of dollars of fear and time and research and attention to.
Fear campaign. In the context of the Brexit debate, they talked about Project Fear, trying to get everybody to be afraid of what will happen if we leave the European Union. We'll all be, scrabbling around in a post-apocalyptic environment, right? Well, Project Fear is just what the government does all the time. It just, the topic changes now and again, but they're always pushing some fear mongering thing. Yeah, the science is good. The science is great. We surrender our will as of this date. That's a great one, Geomancer. I love this terminology he comes up with. I'm going to have to steal it. He talks about social engineering, which is the phrase I talk about a lot. Social engineering is one of the things I hate the most. He also talks about scientistic socialism. I thought that was a great phrase. Right? It's the use of not science, but scientism, right? Trust the science kind of crap, to effectively just push for socialist measures for government central planning. Scientistic.
I love it when you swear.
Oh, did I? I didn't even notice. Okay.
No. I'm teasing. Okay. I'm teasing.
So governments lead us to believe that by virtue of their allegedly greater knowledge and intellectual superiority of their scientific advisors with respect to ordinary citizens, governments are entitled to mold society to their liking via coercive commands. That's exactly what we've been seeing, right? The origin of this fatal conceit lies in the fundamental error of believing that the dispersed practical information the actors in the social process are constantly creating and transmitting can come to be known, articulated, stored, and analyzed in a centralized way through scientific means. And this is impossible in both theory and practice. So when he says this is impossible in theory and practice, he's talking about that economic calculation in the Socialist Commonwealth paper by Mises, those insights. So that's that previous show I shared with you. All right. So
this actually goes back down to, I think, a more fundamental level about the origins of socialism. Obviously, one of the many lines that not just Marxists but socialists of other branches used was that socialism is a scientific ideology. Socialism is scientific in the way that it conducts itself, and that it can account for all the factors. It can account for all the aspects of humanity, and it can create a structure that accounts for all of this. Now, obviously, from our understanding of subjective value theory and human action, we understand that this is obviously not true. But it can be very appealing. This sort of ideology can be very appealing to a scientist who believes that they are empirical and that they understand the universe, or can try to understand the universe at the very least, and can try to account for every factor. Because if you believe that humans are merely our brains at the very least are just chemical reactions, then you can predict what chemical reactions will come from certain stimuli and how people will react. So I'll give you an example of this. In the Soviet Union, the Red Army had whenever they would do an offensive, for example, they would have huge tables of calculations. And they believed that these calculations would help them in whatever they were doing, because socialism is a scientific ideology, and therefore anything that they do can be proved scientifically and numerically, mathematically, and can be proved in that sort of sense. Now, this is obviously an extreme example, but it kind of highlights the point that I'm trying to make, is that socialism can be very seductive to the scientists because of how it's presented as a scientific ideology. You're on mute.
Yep. Yes, absolutely. It's hard to remember now because it was such a joke, right? Socialism, most of us know that socialism just wasn't going to work. But at the time, they presented themselves as we're the most advanced, we're the most scientific, we're the ones acting in a rational manner. And those of you who still want to do that crazy capitalism stuff, or you're cavemen or something, we're the progressives, the scientific, the knowledgeable ones. Okay, so he very briefly talks about pandemics in a free society and a market economy, briefly, because as he says, we don't know exactly how in detail how it would be dealt with, and we didn't get a chance to see that much of it because the government came down so hard. But he says, what are we going to see? The search for solutions and the efforts made to detect and overcome problems as they arise would be dynamically efficient. Great phrase, dynamically efficient, meaning iteratively, right? Try something. Oh, that's not working. Try something different. The government tends to lock in on something and then tell everybody this is the only way, For example, instead of total and all-inclusive confinement, the measures that would predominate in the free society would be far more decentralized, disaggregated, and micro in nature. Information would be transmitted freely and efficiently at great speed. Tests would be introduced immediately and with great agility. Acute shortages and bottlenecks would not occur. And then he says, I need not mention the enormous advantage of individual initiative and private enterprise, nor how differently they operate in terms of researching and discovering remedies and vaccines. And he points out that here's a case where we can see what actually happened, because even in the current circumstances, states have been obliged to turn to them, individuals and private enterprise, to obtain these things quickly when confronted with the resounding failure of their pompous and well-funded public research institutes to offer effective, timely solutions. He likes to mention that in Spain, 80% of public servants themselves, including the vice president of the socialist government, freely choose private over public health care, while their fellow citizens are denied that choice. And even so, at least 25% of the public make the sacrifice of paying the additional cost of a private healthcare policy. That is, the politicians in Spain can just choose to use private healthcare. They, as usual, one rule for them and one rule for the rest of us, right? But the public, even in super socialist Spain, 25% of them, they're paying through their taxes for the nationalized healthcare system or whatever, and they just go ahead and pay 25% more. Or at least 25% of them pay the additional cost of private healthcare policy on top of the government-provided healthcare policy. So even in this dramatically statist interventionist situation, you can see people turning to the private initiative for these things.
It's a revealed preference as to what they really prefer, right? It's actions. The common phrase: actions speak louder than words. And what we're seeing here is mouth can do a lot of talking, but at the end of the day, you got to put money where your mouth is. And when that happens, people choose private because they know, for all the altruism that people like to ascribe to a public good, they know that the private good is just better.
Yeah, I know. It's really irrational. And he mentions a book I love to mention, and so I'm going to just drop the link to it, freely available at the Mises Institute, Discourse of Voluntary Servitude by Etienne de la Boétie. And there he wrestles with the question of why do people obey, and he goes into 4 factors in this article that he's summarizing, de la Boétie, why people obey. I think you'd find it quite interesting. He also mentions another book, which I haven't read, though I've heard of, Michael Huemer's The Problem of Political Authority, and he also recommends that on this issue, because he's talking about the servility and obedience of citizens. And he says, concluding this whole section, there exists a virus even deadlier than the one that triggered the current pandemic, and it is none other than the statism which infects the human soul and has spread to all of us. Boy, we certainly saw that. The government said jump, and everybody said, how high and how many masks should I have on when I do it, Okay, so section 3. The pandemic is a pretext for an increasing lack of fiscal and monetary control by governments and central banks. So he says, to fix things, we should liberalize the markets as much as possible, particularly the market for labor and other productive factors, by eliminating all the regulations which make the economy rigid. But we're in a special situation, as we have discussed on this show, and he thinks it's really relevant to analyzing the effects of the pandemic. Central banks worldwide had already initiated an extremely lax monetary policy of 0 or even negative interest rates and monetary injections, the likes of which, due to their degree of intensity, their widespread nature, and the international coordination involved, had never been seen before in the economic history of mankind. Now, I can't remember exactly, Mad Merc, but I feel like our negative interest rate show was before the pandemic.
It was.
It was very early. So I'm pretty sure it was before the pandemic. So
It
that
was
underscores
significantly before the pandemic.
Yeah, right. Months before. Yeah. Well, that underscores what he's saying. They were already doing some crazy stuff before the pandemic even started, right? That was
And the war on cash.
That was our going in situation into the pandemic, is that they were doing this historically unprecedented stuff, and the war on cash, which we were also highlighting before the pandemic started.
The two are intrinsically linked. You have to remove
Right.
cash if you want to do negative interest rates, or else you're going to have bank runs. And so people have to understand all of this is linked. You can't just separate one and have it in isolation. They are all interlinked with each other, and it's all connected.
So he makes a point that is really interesting. It's a little unclear. Is he talking about the reaction in 2008 here? Never mind. Just this is such an amazing point. One of the many reasons I wanted to go through this paper in detail. The moment central banks launched their policies of massive monetary injections, quantitative easing, and zero interest rates, it had an interesting effect I hadn't thought about. They eliminated, ipso facto, any incentive the different governments of Spain, Italy, France, etc., might have had to introduce or carry through economic, regulatory, and institutional reforms essential to fostering an environment of confidence for entrepreneurs, right? So if this is why he talks about lax monetary policy. He's not talking about the laxity for us. He's talking about the laxity for the governments. The central banks have facilitated the governments to continue to just be inefficient and be terrible. You might all the stuff about Greece, how Greece was having to deal with, I'm forgetting the term, Madmerk, austerity policies, right? Why were they having to do that? They were suffering under some discipline from the European Central Bank. And it was like, you guys got to get your house in order and not have so much debt and all that stuff. Well, we just went through the debt. We saw how that's going in many countries in Europe, right? Well, all this pumping from the central bank means that none of those reforms are going on, right? These reforms, which could actually be beneficial to the economy, would be beneficial to the economy, that all gets nipped in the bud, because why bother? The central bank will just pay for it all, you know? So look at the incentives for the politicians. What government is going to bear the political cost of like putting its accounts on a sound footing, liberalizing the labor market, you know, taking on the unions, right? Like Thatcher did. Why would you bother in this current environment we're in? If regardless of the deficit incurred, the central bank will finance it directly or indirectly and at zero cost by completely monetizing it. So no matter how much you spend, no matter how crazy you act as a government, the central bank finances it. So why tighten your belt? Why fight the labor unions? Why have people, you know, being mean to you because, you know, you're shutting down the mines, right, in Wales or whatever? Why go through any of that? Good. Central bank's just paying for the party. Just go on, right? But of course, this is just terrible for the real economy.
So my assessment of the situation is this. There is a tipping point for every person. And now everyone's, again, going back to subjective value theory, everyone's tipping point is different. But you reach at a certain stage a critical mass with enough people to where enough is enough. This is how revolutions happen. This is how severe political strife starts to happen. So let's go back to, for example, our audience in the UK. The Wilson administration. You had the 3 or 4 day work week. You had rolling blackouts. You had the economic and political and military standing of the United Kingdom go down significantly. You had the troubles starting in Ireland. You had the British requiring to devalue their currency and taking loans from the United States. And slowly over the administration of the Wilson administration, you saw these build up, and it reached a tipping point where, again, you brought up Thatcher. Thatcher finally came in as this sweeping force, and people were so sick of the chaos that they wanted a strong figure to bring order back in. Now, thank God that Thatcher was at least nominally one of us, and had read Road to Serfdom and other works by Hayek, but it didn't have to go that way. It could have ended with someone who was much more authoritarian and much more inclined to central planning. So nothing's a given. And so what we're talking about here is that I say this again and again, and I will say it one more time. I am constantly surprised as to how systems that are obviously flawed and that obviously are going to have a correction can continue to persist week after week, month after month, year after year. And you can see it building up like any sort of balloon or bubble. It blows up, blows up, blows up, and you're just waiting for the blast. But they keep going, and
it's hard to pick the timing on these things, right? That's right. One thing that Austrians can't exactly do, though they've gotten pretty close sometimes. There's a lot of ruin in empire, as Burke said, and it's hard to call. You can see that there's structural problems. You know, we see that incredible debt throughout many European countries. But it's hard to say, like, it could be almost anything that seems small, and it could just cause a massive loss of confidence in the people. And then that leads to not wanting to hold the worthless money, you know, the worthless euro or whatever. And then you have hyperinflation. And you just never know what's going to be the trigger to make the house of cards fall down. You can just see that it's a house of cards and it's shaking, right? Okay, so what does he say? As we pointed out earlier in the earlier article, the European Central Bank already owns nearly 1/3 of the sovereign debt issued by Eurozone member states. And the moment it launched its policy of indiscriminate purchasing of this debt, it halted the entire process of economic and institutional reform the member states desperately needed. I have to say, I hadn't really thought through this. I mean, I know enough economics to know it's not great when the central bank is just handing money out, but I didn't think about the effects on the government itself. Right? It removes all incentives for making any kind of positive changes that could allow the economy to really work. So in a context of great institutional rigidity and economic interventionism, ultra-lax monetary policies serve only to indefinitely maintain the rigidity and lethargy of the economies affected, and to increase the indebtedness of the respective public sectors to an extent very difficult to sustain. So they keep telling us, well, we're just going to pump this economy up, right? And De Soto's pointing out, you are keeping the government from making the changes that would allow the economy to flourish. The very injection of money that Yellen and so forth are saying, we got to inject this money. That's what we need. $1 trillion here, $1 trillion there, right? That is preventing the changes that we actually need to improve, to allow the actual economy to be freed to actually do something productive. So just a fabulous point from De Soto there. Okay,
hence why we pointed out at the beginning of this show the attitudes of major central bank figures such as Janet Yellen and the central bank in Germany, what they are thinking with the global tax rates and the continued injection of debt into the system, especially into developing nations. This is why we highlight this sort of stuff.
So what has been the reaction of the central banks to the pandemic? Starting in January 2020, they redoubled monetary injections even further. So remember, we highlighted that we had already been talking about negative interest rates and the crazy stuff before all this happened. And in January 2020, they started to see the pandemic roll out. And in early 2020, they double down on this. More monetary injections. They'd already been doing them. Okay. So a growing monetary demand on a production which has declined due to the pandemic leads inevitably to an increasing upward pressure on prices. So you hand out a bunch of money, and production has gone down. There's less stuff to buy. There's more money being handed out by the central bank. Prices are going to go up, right? And so this is what we're seeing. And we've been starting to talk about this on the show. The price of agricultural products has continued to rise and has reached its highest point in 3 years. Freight charges and the prices of many other raw materials, minerals, oil, natural gas, have also soared, even to record highs. So this is scary stuff that we're seeing, right?
Again, what we're highlighting here are higher order goods in the production chain. So going back to the Hayakin Triangle, these are the earlier, higher stages of production before the final product. Those are getting more expensive, and this will have a cantillon effect throughout the rest of the economy.
It's widening along that horizontal axis, right? So increasing monetary consumption at the higher order goods. Well, that's going to ripple down through the rest of the as it comes closer and closer to the consumer, and we're going to be seeing that soon if we're not seeing it already. So he says central banks have gone down a blind alley. So what does he mean? He means that they're damned if they do and they're damned if they don't. If they make a forward escape and do even more monetary expansion, more monetization of public deficit, they run the risk of provoking a grave crisis of public debt and inflation. But if, in fear of moving to a Venezuela situation, a hyper inflation situation, they halt the monetary policy, then the overvaluation of public debt markets will immediately become clear, and a serious financial crisis and economic recession will follow. Okay, so, and also he says, of course, the theory of the impossibility of socialism shows that central banks can't possibly correctly determine the most suitable monetary policy at all times. So give that up.
Sorry, can I just address something in the comments real quick?
Yeah, please. If you can highlight a comment, that would be great.
Yeah, sure.
I love having it on the screen.
Will has said here the city alone basically owns all of the largest tax havens, and then Simple Pirate here has responded with, libertarians won't talk about that. Simple Pirate, sorry,
I didn't know about it, but I'm glad to talk about it.
yeah. Sorry. We're glad to talk about it, and secondly, we people in the libertarian community have been talking about how basically evil the city of London has been for a while now.
Yeah.
The intrinsic intertangling of the government and especially just the mayor of London with the city of London has been very much talked about in libertarian communities for a while, and the international nature of the city of London's influence. I think you should be reading a few of the more out there, yes, admittedly, books, but there are many books written by many libertarians around this sort of issue of international finance influencing governments.
Oh, totally. Yep.
Yeah.
Rothbard in particular hits this hard.
Yeah. So to say libertarians won't talk about this issue is it kind of highlights that you haven't actually talked to many libertarians, or you haven't read much of the material.
There's the Lulbert libertarian.
Yeah, the Lulberts are.
Yeah, I believe you there. But libertarians who are actually doing their homework are very well aware of the money power, as they like to say in far right circles. Okay,
Lulbert. We hate Lulberts as well. I mean, we're no fan of them. They're pretty much just idiots, useful idiots. As bad as leftists, in my opinion. But.
I'm not going to get into it, but he does talk about modern monetary theory. I know that's of interest to some people, so I just highlighted it here. And so we come to the last of the bright ideas. He says, the cancellation of the public debt purchased by central banks, which, as we have seen, already amounts to nearly 1/3 of the total. And he gives an analysis of that, which I won't get into, but I just wanted to point it out because I know we have some people who are quite interested in this. Okay, getting near we're almost done. So this is very interesting. I'm just quoting him. I'm not giving you financial advice, but interesting what DeSoto says here. The only sensible recommendation that can be given to investors is that they sell all their fixed income positions. Okay, so just in case you don't know financial market speak, fixed income means government and corporate bonds, but government bonds, I think, loom largest in the fixed income market. So fixed income would be treasuries, for example, I believe would be fixed income, but bonds in particular. So bonds from state governments, bonds from various national governments around the world. Those are fixed income. And it's usually considered a sensible thing in a portfolio. We've been managing my mother's portfolio, she has dementia, so my sister and I manage it for her. We've been moving a little bit more into fixed income, into bonds, because we were so heavy in stocks. We were worried about a stock crash and not having any protection from that. Well, look what I wish I'd read DeSoto, right? So what does he say? They should sell all their fixed income positions as soon as possible, since we do not know how much longer central banks will go on artificially keeping the prices of these securities more exorbitant than they have ever been in history. So he's saying fixed income government bonds are in a bubble and get out. And in fact, he says there's evidence that alert investors like hedge funds are already betting on the collapse of fixed income markets. Officially, they continue to leak reassuring messages and recommendations to the press, to the commentators. This is a common trick we've been learning about. They have the commentators tell people what they want them to hear. Meanwhile, watch what they do, not what they say, right? They wish to get out of the debt markets without being noticed and at the highest price possible. So while the prices are up, they're trying to get out of those bonds. But they don't want the regular people recognizing the problem that's coming. All right, so he has a little, I'm skipping that section. In his conclusion, he says, we will get through this. This is all meant to just be mostly an analysis of what's going on, a few warnings here and there, but he's not too worried. This is not the Spanish flu. He says, no one remembered the Spanish flu of a century ago and the far greater toll it took on the economy and the health of the population. So, this will fade too. This will also pass. We will get through thanks to our individual and collective effort in striving to creatively get our life projects off the ground in the small areas which, in spite of everything, remain open for free enterprise and the uncontrolled market, which is what Matt Merck and I are doing with this channel, right? We are growing this channel. We are getting more and more viewers and supporters. This is a little entrepreneurial venture. Well, people are finding all kinds of things to do in the cracks and crannies that haven't been completely crushed by the government. So that is that paper. I hope you found some interesting things in it. I thought it was extremely meaty. In fact, let me share that link one more time at the end. Hopefully some people are wanting to sit down and really study through it. It will reward. I skipped over some great stuff. It will reward your attention. It's just about 10 pages on PDF, but they're kind of in micro print. So think of it as about 20 pages of reading. And he writes really well. He's writing in Spanish, and this is translated? I don't know. But the English is excellent. His explanations are very clear. As Academic Agent was highlighting in the chat, he's teaching you about Hayakin triangles, which are just essential, demand for money, the core econ stuff that will really help you understand the world and help us to understand what we're dealing with right now with the relatively mild pandemic crisis and maybe the not so mild reaction of the governments to it, which is probably going to end up having a worse effect than the pandemic itself. Okay, so let's see. Let me get super chats over where I can see them. Here we go. And I'm going to take the share down and let's do a few super chats here. I think we have some, which is much appreciated, guys. All right, we are on April 8th. Here we go. Okay. Oh, and first of all, let me see if there's any I can actually put on the screen that haven't scrolled off. Nope, they've all scrolled off. Okay, that's all right. I wish they'd let me put them all on the screen. That would be nice. Okay, so first super chat is from an anywhere somewhere. Finally sold my gold and silver ETF stakes and bought physical. Hold on to your hats, lads. Inflation incoming. Pennies for the competition. So what's an ETF, Matt Merck? What's he talking about?
Electronic traded fund.
Right. So he's saying that is not as good as holding the physical gold and silver, right? It's sort of, you have a position in gold and silver, but you don't have it in your hands, right? That's the problem.
Right. So you get more, it's easier to trade if the price of gold and silver goes up and down. So you buy an ETF, the price of gold goes up. Let's say your ETF goes up a bit as well. Then you sell your ETF and you collect profit on whatever percentage change that was. The problem is that there's a lot of ETFs out there and not much physical in comparison.
Mm-hmm.
So either the ETF price needs to come down or the physical price needs to come up.
So you're saying there's a little bit of a fractional reserve style problem with the ETF market potentially.
Right.
Yeah, that they might not have 100% backing in terms of physical gold and silver.
Exactly right. Again, not financial advice. Do not trade under this financial advice. Any risk that you take is on you. Follow your local laws. But yeah, that's essentially what's happening, especially in the silver market. Silver ETFs are wildly overvalued in comparison to what the value, how much silver there actually is in the market. So holding on to physical is much better because you have it. And if you're going to hold on to physical, actually hold on to it. Do not hold it in a third-party storage facility.
It has a tendency to disappear when times get hard, right?
Yes, exactly, right?
Yeah.
Notably, employees simply just take as much silver as they can of what's formerly yours.
Right. Yes, we've had that problem with banks in the past, right?
Yeah.
Until finally now they just don't even bother. Okay, so thank you. Excellent. Let's talk about the next one. Alias Jones says, sufficiently advanced stupidity is impossible to tell from outright malice. Yeah, I think it was very interesting what DeSoto did. He divided up the behavior of the government into two pieces, right? One, you could just say, not stupidity exactly, but impossibility. The government just can't do some of the things it pretends it can do, you know, to better coordinate the economy than the economy can coordinate itself. It just can't do it. But then number two is the outright malice, right? The lust for power, libido dominandi, the lust to dominate, right? That is also part of the picture. They're both part of the picture. You know, some very nice, well-meaning politicians, perhaps, who are, you know, maybe personally virtuous, right? They're Christians who felt like God was calling them to get into politics or something like that. They still can't manage the pandemic because it's just impossible. But then you have the much more typical politician, which Hayek wrote about in How the Worst Get on Top in The Road to Serfdom, chapter 10 of The Road to Serfdom, who gets in there and gets a taste of power and really likes it. And spends a lot of time doing spin and telling everybody how they need him to be in charge of them and all this stuff, right? So yeah, excellent comment. Chris Primer, good to see you in the chat and in the super chats, Chris. Speaking of supply, the Perth would be Australia, right?
Correct, Western Australia.
The Perth Mint has been attempting to deliver Chinese silver to its clients while implementing rationing of kilo bars. Okay, what?
Correct.
What is Chinese silver? I don't understand. Can you unpack this?
So there's been a major shortage of silver lately. People, again, recognizing that there are too many ETFs for the physical, for like if you were to collect on the physical, there's not enough physical. So people have been buying a ton of silver, especially in the Chinese market. And so there's been shortages of silver coins, silver bars, unrefined silver, all this sort of stuff, especially the 5 kilo bars. You know, if you're doing big volume trading, the 5 kilo bars have just been impossible to even find, let alone get. So what we're seeing is right now a silver shortage, but the price has not moved significantly up yet. So there's this disjointed nature of the market. There's a lot of demand, but the price hasn't adjusted, and the ETFs are there's more ETFs out there than what there is physical silver, and yet still the price hasn't adjusted. So everyone's wondering, well, how is the silver market price not adjusted yet? This is really strange. This is really weird. So there might be a little bit of shenanigans going on in the background of some of these markets, but again,
this caught my attention from Chris Primer. People want Perth Mint bars. Perth says they have 60 tons, but people don't trust them. This reminds me of Ron Paul's call to audit the Fed. the central bank in the United States holds gold, and you might have heard of Fort Knox, right? There's like movies about trying to knock over, or to get into Fort Knox and steal the gold and stuff like that. They actually have gold reserves, right? But Ron Paul doesn't trust them. And he says we should have an independent audit where somebody goes, checks the gold, make sure it's really gold, make sure there's really the amount there's supposed to be there. He's wondering if some gold has made its way out somehow, So anyway, who knows? But it would be interesting.
Well, this is a famous thing. This is a famous thing with Switzerland, right? The fake gold scandal. They take certain bars, remelt, so that many countries hold gold and financial institutions hold gold in Switzerland because they're seen as a rather neutral third party with their financial institutions. But there's been a rumor going around over, I don't know how long it's been, like 5 or 10 years, that they just take different bars, remelt them, resmelt them, and then they print different numbers on them and different insignia to show central bank inspectors or financial institution inspectors, oh yeah, we have your gold here. And it's just, all it is the same couple bars resmelted over and over and over again with different marks and stampings, where they pocket the other gold that was meant to be the actual reserve.
That's bad. Okay. Super chat.
Again, it's just a theory. Please, Swiss secret police, do not come and kill me.
Yeah, right. So getting back to where we were looking at the debt levels of various countries, Mickey has to chime in on Czechia, where he's from. I feel an urge to boast. Czechia has about 30% public and 70% external. Yeah, that's pretty good relative to some of the numbers we were seeing. And then Chris Raposa says, no wonder these countries want a great reset. Yeah, that's a very interesting comment. When we see those debt levels, I wonder if the Great Reset is basically a way of priming us for, we're going to wewipe out our debt.
Yeah.
Right. We're going to. The reset wasn't. I mean, I keep thinking the reset's for us. Maybe the reset's for them. That's a really interesting thought. Okay, those are the super chats. Thanks to everybody. I guess last couple things to mention. Once again, that where's my window? That's what I want. Yeah. The Trivium is now complete and available from Academic Agent. I think that's quite exciting. So please take a look at that. Classic learning that helps you navigate the world. And then we're particularly pushing right now our Subscribe Star, which is really a very modest way to be supportive. I think all I've got set up, maybe I need to work on some tiers or something. I think all you can do is give us $5 a month. I don't think I even have anything else set up. I got to learn how to work the thing. But that humble little bit of, I've just put the link in the chat, that humble little bit of support really makes a big difference.
We got one final super chat.
We got what? Oh, yeah.
One final super chat.
Yes, and I get to highlight it. Oh, I have to be in the right screen to do that. Okay, here we go. Yeah. So Sam 153, thank you, sir, says enlightening discussion. Cheers. Thank you. Good.
Thank you very much.
I hope that what you see with the show is that we are willing to go deep in a way that you're not going to get on TV or even on most YouTube channels. We're willing to take you to economic theory, economic history. That is, well, that's why we call it the Deep Lore Econ Chat, right?
Correct.
So anyway, a little bit longer this week, but I was just so excited about that piece. It's so relevant to what's going on. It gives us a lot of tools for understanding the news. I think we'll be returning to some of those insights from Jesus Huerta de Soto in coming shows as we continue to monitor what happens with all this debt and all this central bank money that's floating around. Like somebody said earlier in the comment, how is any of this still working? That's what Academic Agent's been saying lately. It's just, this is nuts, right? This is just nuts. So,
well, when
anyway.
you put a gun to someone's head, they do tend to work a little bit.
Okay, this is truly funny. Academic Agent should hear this. He's probably not still here, but Geomancer says, they say if you complete Academic Agent's course on rhetoric, you get a bronze bust of Tony Blair as a token of accomplishment. That is really That is really funny. I am sharing that with AA right now. Okay, great. Thanks, guys. So good to have you. Anything else? Yeah.
Yes, before we finish, again, guys, we're doing the question of the week. Question of the week for preparing for the future and preparing for who you are, who you want to be. The question of this week, so question last week was, what have you done to prepare for yourself for a natural disaster or financial situation? Do you have food? The question this week is, how are you going to stay in contact with people? Not just people around the world. I mean, with your family, extended family. Yeah. How do you intend to stay in contact with people? Because
if usual channels are not working. Yeah.
Right. How do you stay in contact with people? Just think about that. Give it a bit of pondering. You could use a radio. You could use a landline. I don't care. But how do you stay in contact with people if a natural disaster happens, if there's the grid fails, whatever? All right. That's the question for the week. Ponder it. That's your question for the week. We have the flag competition. The flag competition is going on. We have had so many good designs.
Oh, that's great.
So many good designs. I feel that this one's going to be even better because we have the descriptions and everyone's getting really involved because they know from last competition that we do deliver on our promises and we do get silver. We do get people their prizes. So this is a way for you guys to get involved with us, chat with us in the community, join a Discord, and submit a flag about a city-state. It can be real or fictional. And you have to just come up with a little story and the meaning behind each of the symbols and colors behind the flag. But this is what we want. We want you to get involved. We want you to be involved. We want you to get around the community. And this is a fun way to do it. And we want to have a good time with you. So please join the Discord, read the rules for the flag competition, get involved, talk to people there, expand your knowledge, and prepare for the future.
Okay, we got to just a few more jokes. We were talking about you asked the question of the week, how to stay in touch. Smoke signals, says Polly. Carrier pigeons.
Yep.
And then Apostolic Majesty, use owls, right?
Is that a Harry Potter reference or something?
I wouldn't know. You'd have to ask Apostolic Majesty. I don't know if he's into that sort of thing. Maybe he just thinks owls are a great way to get messages around.
True. Oh, by the way, Apostolic Majesty, I've been really enjoying your streams with him. And if you guys don't know, Radical Liberation has been on a few streams with Apostolic Majesty, talking about a variety of topics. We've been going history,
more history kind of stuff, because that's his channel is more of a history channel. Yeah.
Right, something I've really been enjoying listening to as a history buff myself, and someone who's been interested in the topics that you guys have been able to discuss with each other. Highly can recommend Apostolic Majesty's channel, and if Apostolic Majesty would want, there's the link. Spread the link.
I'll link to my most recent appearance on his channel. So really recommend it.
If Apostolic Majesty wanted to come on this channel, obviously, I think we would be more than willing to have him on for historical context. And
we are working on it. We're working on a topic. So, all right, indeed. Okay, we're gonna get going. Thanks, everybody. See you next week.
Goodbye, everyone. I'll be in the Discord. Remember.
Yes. Join the jump in the Discord.